a bit of a break. I think you've probably
Absolutely.
chosen a good time to leave the banking sector.
I don't know, you tell me.
Steve, but clearly if we look at the results, the diversification strategy moving away from your reliance on retail banking seems to be paying off.
Yes, that's very pleasing because if we really look at Absa a few years ago, we would have taken a lot of pain and announcing negative growth earnings. And no doubt the Barclays acquisition of a controlling stake has improved the competitiveness of Absa as a franchise, and clearly from the investment bank one can see the benefits of the transaction.
Is that Barclays moniker, or is it becoming a bit of an albatross now in these sorts of conditions, at least from a perception point of view?
No, I won't say that. I think that there's still a lot of opportunities in investment bank. Remember that from a mandate point of view, we also have the Sub-Saharan African franchise to exploit business opportunities, and there's still opportunities out there. In addition to that, the investment bank is coming from a low base, so there's still a road for them ahead.
Where would you like to see the breakdown or the balance between retail and corporate?
I've always said 50%, but clearly I don't want to achieve that if retail has a 25% negative growth for the year. I would say a strategic objective is 50%, so equal to the earnings of retail.
Corporate and business banking did quite well during the year. Are you expecting that to continue this year, or are you likely to see more corporate failure?
Look, the consumer has gone through a very torrid time, and flowing from that will be hardship for the businesses. We're starting to see the signs coming through in the business performances, and I expect impairments to pick up substantially in the year ahead, specifically with the economic outlook that I see.
On the derivative side, the SAFEX debacle didn't help your cause there in the second half. Are you expecting, or are there any potential other time bombs that might be going off in 2009?
You know, we're in the business of risks, and when you have severe economic cycles like this, there's always one or two things that pop out. Obviously, we do our utmost best to really be ruthless and robust in terms of our operational risk procedures, and hopefully we won't have another hiccup like that.
Was this a bit of a wake-up call at that side of the market?
I would say yes, we had some gaps in our control environment, and we've taken corrective action.
On the retail side, bad debts up strongly. Home loan impairments up, I think, around 300%. Where was the kicker there?
No doubt that the affordability levels, increased delinquencies, the collateral, and a huge pressure. And I think that is the unknown factor for the year ahead. If collateral is going to come under more pressure in terms of the accounting rules and models, you will see more an increase in expected losses within the home loans portfolio.
Are you talking now about home values themselves and what you take as security almost?
Yes. And once that comes under pressure, let's say, for example, we have negative growth in terms of collateral values in home loans, it will impact all the banks, but specifically Absa because of our significant market share in home loans.
How much do you normally get when you repossess and resell a house?
It's a moving target. The houses below 600,000 rand, it's still in good territory. We recover the full amounts. Houses between 600,000 and 1.2 million, about 95%. But the houses above that, a bit of a moving target, and you can write off up to about 20% of the value that you have it on your books.
And your motor book?
That's improved, believe it or not. Latter half of the fourth quarter of last year, we've recovered almost 50% of outstanding amounts, whilst earlier in the year it was 43%. So we've seen an improvement there, but there's not a lot of cars out there to be financed.
Steve, your NPLs, you talk about any account in arrears for more than 90 days. Does that mean we haven't seen what's happened over September, October, and November, December?
With the high interest rates that we see now, there's no doubt in my mind that we will take some further pain on the impairments line, specifically the first 6 months of the year. If we look at the interest rate reductions of 150 basis points up to now since December, we need a lot more, and we need it fast. And if we're not going to see that, the impairment line, specifically mortgage loans, will be under severe pressure for the first 6 months of the year.
Steve, just to close off with, you say in your results that you're likely or you're hoping to get to flat earnings over 2009. Where's that going to come from? Is that costs or is that improvement in earnings?
I would say a combination of diversification benefits coming from Absa Capital. Our bank assurance franchise is also a very neat little contributor to our profitability. And then lastly, I would say a lot of cost discipline and a lot of cost efficiencies.
Steve Booysen is the outgoing CEO at Absa, and we hope to have him back in the studio and a different guise, well, sooner rather than later.